everybody, I'm Keontae Taylor, and I appreciate this opportunity to spend a few minutes sharing some information with you about my econ. But before we get started, I would like to tell you a little bit about myself. Now, I know I look very young, but I'm a junior at the College of Charleston and also a cadet at the Citadel. My plans for the near future is to go into the Army as a second lieutenant in the medical field. I've been learning about finances ever since I was about 4 years old because my mother was constantly doing what you might call dripping financial knowledge on my younger brother and I. I'm 20 years old and I'm preparing monthly for my future by investing in a Roth IRA with Fidelity. I learned early that the younger you are, the less money you are required to have to invest for your future. But the older you are, the more money you will need because time isn't on your side. I also know what compound interest is, as well as what is the difference between an asset versus a liability. For example, an asset is something that puts money into your pocket, while a liability is something that takes money out of your pocket. When I was younger, I used to kid around with my mother by telling her that my brother and I were a liability instead of an asset. No, but seriously, I'm saying this not to impress you, but to impress upon you that you can't choose who your parents are, but you sure can choose who you hang around in order to get the same knowledge that I received at a young age. So let's jump right into it and get started. Almost everyone would like to grow and enhance their personal finances. My econ has empowered thousands of people financially. I can tell you from my own personal experience, it has played a significant emotional event for me and my family. Let me give you an example. My mother was paying almost $700 per month in federal taxes when she was introduced to my econ by a friend. She was able to get that money back every month, take it and pay off her debt, and start preparing for retirement. My econ is a fast-growing, debt-free, technology-driven company based in Atlanta, Georgia. The company has empowered thousands of people to minimize their taxes, earn income online, and build retirement income. My econ has contracts with over 100 Fortune 500 companies and has enjoyed many years of exciting growth and success. The company is managed by a diverse veteran leadership with many successful years of corporate, finance, and marketing experience. Oh, and by the way, my mother has been affiliated with the owner of this company for over 15 years. Our mission is to empower people to attain personal financial success. Now, what is personal financial success? It's simply having enough cash flow to support a person's lifestyle during their working years as well as during their retirement years. The money to support our lifestyle must be generated from two unique sources. During our working years, the money comes from our labor as we work jobs or build businesses. But during our retirement years, the money is generated by our assets with investments. Let me give you an example. A person earning $100,000 annually during the working years and desires the same income during their retirement would need about $1 million in their retirement account. If the $1 million in the retirement funds earn 8 to 10% annually, it would generate about the same income they earned during their working years. The concept is simple, folks. We must generate enough cash flow during our working years to support our lifestyle and simultaneously invest enough money monthly to build adequate retirement assets. You see, there's a difference between how poor and middle class people think versus how wealthy people think. Let me give you an example. This is called a generational life cycle. As a society, we have been conditioned to go to work, get a job, buy a house, penny pinch, and we will be all right somewhere down the road. This family is moving horizontally, or I would like to call flatline. I say this because when poor middle-class people are conversing, they tell their kids to go outside and play. Grown folks are talking. Now, on the other hand, wealthy people keep their kids around them when they are talking business because they are doing what they call dripping on them, as I stated earlier. Wealthy people send their kids to the same schools as poor middle-class people, but they send them with a different mindset. Wealthy people will say, go to school, get a degree, and learn how to own a business instead of working a job. I can remember when I was in the 7th grade and we had a career day at school. I informed my teacher that I was going to be an entrepreneur, and she told me I couldn't choose that field because it was not a job. It kind of baffled me in a way, because what I was taught by my mother since I was 4. So I respectfully replied to my teacher, why would I want to work for someone for the rest of my life when I could have people working for me instead? A teacher only makes about $35,000 to $40,000 a year, right? Needless to say, that question got me in a lot of trouble. I didn't understand why at the time, but at any rate, I was sent down to the principal's office, who then called my mother. Once my mother arrived at the school and spoke to the principal, she explained to him on why I felt this way, and they allowed me to keep my dream as an entrepreneur. When I got home from school, I had discussed the issue with my mother, and she informed me that even adults are not aware of what I know about money and investments simply because their parents didn't know, so they couldn't pass the information on to them. After speaking to my mother, I kind of felt sorry for all the adults that were walking around and didn't know what I knew as a kid back then. Unfortunately, most people do not attain personal financial success because of 4 major obstacles. The first obstacle is limited income and inflation. The cost of living, or inflation, increases faster than wages for millions of people. Let me give you an example. A person earning $35,000 in 1993 and $70,000 today, about 20 years later, is earning about the same income they earned in 1993. Now, obviously, they get more dollars in their hand, but in terms of buying power, it's about the same income. Additionally, millions of Americans lose about 1/3 of their income to taxes. Let's talk about high debt. High debt causes many people to spend thousands of dollars annually because of the interest they are paying on it. The fourth obstacle is less than ideal cash flow management, which prohibits many people from maximizing their earning power of their cash flow. Millions of people earn 2 to 4% annually on their investment, but financially successful people average 6 to 12% annually. A one-time investment of $10,000 that earns 4% annually for 24 years will grow to $26,000, but at 8% annually will be worth $68,000 during the same time period. I was amazed when my mother taught me the value of compound interest. There are several places where you can go to get a 10 to 15% rate of return on your investment, such as Fidelity, is where I have my Roth IRA. But other places are T. Rowe Price, Vanguard, and Mullenkamp. But guess what? It is nearly impossible to build retirement funds with low rates of return. These obstacles cost people thousands of dollars each year, which make it difficult to enjoy a comfortable lifestyle and build adequate retirement assets simultaneously. Fortunately, MyEcon had the solution for overcoming the obstacles and attaining financial success. Here's the solution. The first strategy is to minimize taxes. The second is to earn business income. And the third strategy is cash flow success. Let's discuss each strategy in more detail. Our personal financial success system, which has 3 smart cash flow strategies. Each strategy empowers associates to increase their cash flow. We have a system that will show you how to strategically minimize taxes. Listen, when you minimize your taxes, this is a very important cash flow strategy. Why? Because many Americans lose about 1/3 of their income to taxes. We use 3 methods to assist our associates to minimize their taxes. The first method is correcting your tax withholding. According to the IRS, 80% of all employees have their tax withholding forms filled out incorrectly, which can cause employers to withhold too much money from employees' paychecks. Most people claim 0 or 1, only because they didn't know any better. Over the last 15 years or so, I have watched my mother teach thousands of people how to save millions of dollars by properly filling out their W-4 form. I also learned that just because a person works in the human resources department, as a tax advisor or a CPA, does not mean they are financially literate. With this information, can you just imagine having an extra $500 a monthly for investing, debt elimination, or enhancing your lifestyle simply by correcting your tax withholding? I'm preparing my future now so that I won't have these issues when I'm older. The second method is home-based business deductions. Because business owners have access to hundreds of deductions that employees do not have access to, let's take a few minutes to understand the net income difference between W-2 employees and a home-based business owner. These numbers, the standard deductions, and exemptions can be found on the 1040 form and the back page of the W-4 form. It's important to know that these numbers change annually. In this example, we have 3 married couples with 2 children, each of them earning $70,000 per year, and they don't own any real estate. Their standard deduction is $14,800, and the exemptions are $11,900, which total $26,700. For the first couple, we are going to take that number and subtract it from the $70,000, which gives us $43,300, which is couple number 1's taxable income. Couple number 2 has a part-time job and earns an additional $5,000 per year. The taxable income is going to be $48,300, which is $5,000 more than the couple number 1. Here's the problem. Neither couple can shelter their hard-earned income because they don't own a business or real estate. Now let's take a look at couple number 3. They decided to start a part-time home-based business and made an additional $5,000 per year. They are entitled to receive over 500 tax deductions. How are they authorized for so many deductions? I'm glad you asked. Listen, when you team up with me, I'm going to provide you with the tools and resources to audit-proof your business simply by owning a home-based business. Now, I'm not going to cover all 400 tax deductions in this example, just a few. So couple 3 are only paying taxes on $23,300. Let's go further and discuss how couple number 3 are entitled to so many tax deductions as a home-based business owner. The government says that you must be in pursuit of an income to get the maximum amount of tax deductions. This does not necessarily mean that you closed or made a sale. It simply means that you're in pursuit or attempted to increase your business income. Business miles. As a business owner, you are entitled to receive 56 cents for every mile you drive your car when in pursuit of business, or by deducting a percentage of expenses such as gas, insurance, maintenance, lease payments, the interest on loan, and the cost of the vehicle. That means if you drive to a business function, regardless of where it's held, someone's house, a restaurant, or a hotel, that mileage is now tax deductible and can be written off as a business expense. So in this example, the couple was able to write off 56 cents for every mile they drove for a total of $5,475 in business miles. Communications. If your home-based business requires the use of the internet, you are now entitled to write it off. The same applies to any phone service or fax service used to conduct business as long as a separate line is installed for business. It doesn't matter if you are a homeowner or renting, you are still entitled to claim this deduction. In this example, they would write off $1,500. Business meals. According to the business meals and entertainment deduction rules, if you take a potential business client to lunch and you spend $50, 50% of that money is tax deductible, which is a total of $25. Now just think about it. If you were going to eat lunch anyway, why not discuss the benefits of your business and make it a tax deduction? The only thing you're required to do is keep proper documentation, which will go more into detail within a minute. Your employer may not allow you to claim these types of deductions. However, the probability of them claiming a business meal deduction is extremely high because they own the business. As a business owner, this puts you on the same even level playing field as a C corporation such as Microsoft, but from the comfort of your own home. So in this example, we'll estimate that all expenses for the year total $25,000. This is just a small number. However, it could be substantially higher. Here's the deal, folks. When you know the rules, then and only then can you effectively play the game. Guess what? This information isn't hidden. It's free from the IRS. So obviously a home-based business can help business owners put thousands of dollars in their pocket. Now, the third method is quality record keeping. The IRS requires all business owners to keep records to qualify for their business deductions. MyEcon makes record keeping simple and easy with its online record keeping system, the Cashflow Manager. The system is great because the user needs no special tax or accounting knowledge. Let's take a look at our Cashflow Manager tool. In this example, we have John on the sample input screen. To record a tax-deductible expense, you can access the system via your smartphone, tablet, or your computer. You simply choose the expense category from the drop-down menu, enter the amount of the expenses, who the expense was paid to, and what the expense was paid for. In the expense log, the system stores the expenses in the multiple formats, which make tax preparation and analyzing the expenses simple. Imagine saving $5,000 annually on taxes for the next 10 years. That's an additional $50,000 you can use for investing, debt elimination, or lifestyle improvement. Now that's what I call a really smart cash flow strategy. When I was younger, I can recall my mother hiring me to document an Excel spreadsheet and file her receipts for her. I didn't quite understand back then why I was doing it all those years, but I sure was happy to get paid for it. Because as a business owner, my mother was able to hire me and write it off on her taxes. These are the same benefits that are given to McDonald's or Wendy's owners. She would pay me for her business account, then I would write a check to my private school with the money, and my mother would write off that tax deduction as a business expense. I thought that was pretty awesome. Our second smart cash flow strategy is to be able to earn business income. With our business income strategy, it's essential because millions of people desire additional income and simply cannot get a significant pay raise on their job. We provide each associate with a world-class online business income system and personalized business website. The personalized website has marketing displays for MyEcon, specialty products, and our online cashback mall. The cashback mall has marketing displays for over 1,000 companies and millions of products and services. Many of the stores are household names like Walmart, Macy's, and Best Buy. To make money, you simply refer people to your website. For me, I love to shop, and with MyEcon Mall, I'm able to shop at the comfort of my own home for things I was already going to buy in the store anyway. But the difference is I get to save money on it. When customers shop, they get great online pricing plus cash rebates up to 30%, and MyEcon associates get commission. The system is great because the customer saves money, MyEcon associates make business income, and the cash rebates build great customer loyalty. The purchase is picked up at the store or shipped directly from the store to the customer. So MyEcon associates have no responsibility for shipping, exchanges, or customer service. Because the system is online, you can do your business from all over America from the convenience of your own home. With MyEcon, you will be able to achieve fast pay and promotions. For example, when you start MyEcon, your career as a marketing director, you earn 25% on all sales commissions generated on your website. Plus, $25 on the first 3 marketing directors you personally enroll, and also a 50% base shop income match. When you have personally enrolled 3 marketing directors and generated $5 of commission value, you are promoted to executive vice president. Let me explain how you can earn what we call upfront, leverage, and residual income. Because in order to create wealth, you must always have partners who are the same like mine, because there is no greatness in the number one. J. Paul Getty made a profound statement. He said, "I would rather be paid 1% of 100 people's efforts rather than 100% of my own." Now, what does that mean? It means that you get more accomplished with partners. Let me give you an example. Have you ever noticed on TV commercials when a lawyer says, if you have an accident, call Hobgood, Weeks, and Jones and Associates? Why are there always so many of them? Because they understand the principles of asset leveraging. By understanding this principle, it will allow you to get more done if you have more people working for you. Because there are only so many hours in a day and there's only one of you. I learned this principle at a very young age. When I was a child, I was asked to do chores around the house. In order for me to complete my chores, I would solicit some of the kids in our subdivision to help me out. Anyway, I didn't mean to get sidetracked, but what I was saying is, as an executive vice president, you will earn 50% of the sales commission on personal sales and up to 25% on all your team sales. Because as an executive vice president, you will receive $50 on each marketing director you personally enroll, $25 on the first 3 marketing directors, each of them enrolled to infinity, plus a $1,000 bonus each time 7 new marketing directors enroll in your base shop. That's what I call creating a quick cash flow. That's really a simple process. You receive $50 on unlimited personal enrollees and $25 on the first 3 marketing directors, each of them enrolled to infinity, plus an additional $1,000 bonus each 7 new marketing directors are enrolled in your base shop. You earn $1,175 each time 7 marketing directors enroll in your base shop, plus up to $6 residual income monthly on each active associate on your entire team, and up to $2.50 on each $10 of sales commission generated by your team. Our third strategy is cash flow success. This strategy empowers our associates to make money with their money. Most financially successful people make a significant amount of their income by investing, using their money to make money. Unfortunately, because most people have high taxes, high debt, and limited income, it is difficult for them to have extra cash flow for investing. Most people need extra cash flow to get started with this strategy. At MyEcon, we assist our associates to get the extra cash flow quickly via the W-4 form tax savings strategy and business income. Can you just imagine having an extra $1,000 to $2,500 monthly to apply to your debt? The debt melts away and you can quickly become not debt-free, but free to do what you want and when you want on your own terms. I can remember asking my mother one day, how much does it cost her per month for us to live the type of lifestyle that we do when I was growing up? And she gave me the figure, and I thought to myself, I better create me an income-producing asset when I get older so that I can maintain the same lifestyle. At the age of 13, I had become what you call psychologically unemployable because I didn't like my time being controlled by an alarm clock or by a boss. I enjoyed the fact that once my mother had retired from the Army, that she could pop up to my school and have lunch with my brother and I whenever she felt like it. Here's the deal, folks. I'm telling you that when the debt is eliminated, you will have 3 new streams of income coming into your household. The income you were formerly losing to taxes, plus the part-time business income and the cash flow you formerly used to pay on your debt. It's an awesome feeling. Using those 3 income streams to begin investing heavily, and you can quickly attain personal financial success or maybe become a millionaire in a short period of time. Picture this. Imagine investing an extra $1,000 to $5,000 monthly and watching your retirement assets grow. The bottom line is we require enough cash flow to cover our lifestyle and simultaneously make investments for the future. More income, less taxes, and less debt make attaining personal financial success easier. Let's look at a quick scenario which can shed more light on this powerful strategy. The debt is eliminated in 20 months. This is an example of an employee who has $30,000 in consumer debt with a minimum payment of $750 a month. The debt is a $15,000 car note and a $15,000 in credit card debt. The associate is struggling to live comfortably and invest for the retirement. Let's take a quick look at how our system can help. The employee becomes a MyEcon associate and changes his W-4 form, which increases his take-home pay by $300 monthly. The associate begins to build his business on a part-time basis and starts earning an additional $800 per month. The associate now has an additional $1,100 monthly to work with, $300 from tax adjustments, and $800 from business income. The associate pays $1,100 monthly on his debt. The associate now has $1,850 monthly cash flow to invest, $300 from tax adjustments, $800 from business income, and $750 from eliminated debt. If the associate gets 8% annual return on his investment, he will have $207,000 in 7 years, $440,000 in 12 years, and $1,089,000 in 20 years. The strategy is powerful. Millions of people desire financial success, but most don't have the right strategy and support they need to attain it. If you are one of those people, you are in the right place at the right time. MyEcon's personal financial success system is the solution. Now, you just received a wealth of information on how to save a tremendous amount of money on your taxes simply by owning a home-based business. I'm so blessed to have been taught this at a young age from my mother. She has encouraged me to read a lot of books such as Rich Dad, Poor Dad by Robert Kiyosaki and several self-help books. Now here's what you will receive when you get started in MyEcon. A personalized website along with an awesome cashback wall with over millions of products, a world-class business income system, world-class financial software, valuable tax benefits, and world-class support and recognition. So what's next? Sign up today and receive the entire system for the one-time fee of just $179.99, which by the way is tax deductible, plus a small monthly website management fee of just $29.95. All that's left for you to do is just click on the link below and let's get started with my econ today. When you join my team, I know I look young, but guess what? I have a lot of experience exposed to me over the last 15 years or so that most people who are 30 to 40 years old, that they don't have. I will expose you to the tools you can use in order to be able to funnel more leads to your business online without even leaving the comfort of your own home. This will allow you to live the lifestyle you deserve to live. And oh, one more thing. Don't hesitate, because every month you let go by, you are giving the government an interest-free loan on money that you can't get back. So let's jump right into it and get started. Thanks again for watching. I'm Taylor, and I'm looking forward to taking this journey with you. Have a fantastic day.